Hello, everybody. My name is Clive Thompson, and I'm here with Nick Ward of Gold Bullion Partners, who's going to tell us about everything which is going on in the precious metals market this week and this month. Hello, Nick.
Hi, Clive. Thanks very much for having me on. Yeah, I'm glad we've got this in and arranged because I'm on holiday at the moment. But where do we even start? The market's going crazy. But in 2 days' time, on February the 15th to the 23rd, the Shanghai Metals Exchange closes for the Chinese New Year, as you know. And that's 9 straight days with no physical price anchor from the world's largest physical metals buyer. And that means that the paper casino in the West is basically going to lose its referee. So this is going to be the manipulation zone, if you like. And every time Shanghai goes dark, the COMEX wizards come out and slam prices with phantom selling and naked shorting. And in all likelihood, I think they're going to try and flood the market in the next couple of weeks with paper contracts backed by nothing, while retail traders are going to panic sell or give up their physical at massive discounts, which is obviously exactly what they want. So last night, Clive, which is obviously when I messaged you, this isn't just another dip. It's not. And I think this is what people seem to think. Global debt spiraling, currency wars are heating up. The BRICS nations are ditching the dollar like it's going out of fashion. And the smart money is already positioned. So when Asia comes back online on the 24th, all that pent up physical demand is going to hit those suppressed prices like a freight train. I don't think people are ready for what's coming there. And history doesn't lie. Past closures have seen wild swings, kind of anywhere between 8 and 14%. You get these artificial dips followed by explosive rebounds in the metals when Asian buyers return to the market. And combine that with the COMEX numbers, and I think what happens in the next fortnight, in the next 2 weeks, is going to reshape the metals pricing mechanism for years. I really do believe that. I know you've been doing some videos on this too, Clive, and I don't want to go over old ground again, but you've covered it extensively. But I just want everyone to know exactly what's happening in the vaults and how rigged the system really is. So people can, well, they can take action accordingly, position themselves, maybe get some of the physical while they can still get it. So, as we know, the world's largest silver exchange, the COMEX, have just 98 million ounces of silver available right now. That's it. And in 14 days' time, they are facing, I think the number right now is 327 million ounces, Clive, in open contracts.
Yeah, I've got it somewhere. They've got, yeah, hang on a second, I'll bring it up.
I think it was that last night.
It's... sorry, I'll come back to it in a minute.
Yeah.
But yes, it was 300 and something thousand ounces. That number, by the way, Nick, is going down very sharply. So it could.
It is.
And it's being rolled into May to a large extent. So it may well be that we get to the end of or the March delivery month, and a lot of people are squeezing the price higher to force the shorts to close and effectively for the longs to sell.
Yep, I do. I totally agree with that. But I mean, still 327. It's like, I suppose it's a bit like having 100 seats available on a flight. 320 odd travelers turn up, but there's only 100 places, and everyone's expecting to get on it.
And now, they put the price up and say, "Who wants to sell their seat?" And someone sooner or later says, "I'll sell my seat at a certain price."
Yeah, it wouldn't surprise me if like a Ryanair or something tried to do that in the future, Clive. Yeah. But yeah, first notice day for March delivery is February the 27th. That's only 2 weeks away. And the vaults at the COMEX, well, I mean, they've been draining at about 785 ounces every day, so sometimes 700, 750. They are nearly out. So the maths don't work. The system's under immense strain and something has to break. This isn't a conspiracy theory. Obviously, it's all basic maths, it's all public data, but the mainstream aren't talking about it at all.
This video is for educational purposes only. I am not your financial advisor. Gold, silver, and mining stocks are volatile and prices can fall sharp.
The figure taken out yesterday, which I just try to bring up here, taken out of COMEX was 2.3 million ounces, literally removed completely from the CME warehouses.
It's mad. It's absolutely mad. And again, I think everybody in your audience does know this, but just in case they don't, the COMEX is a paper market. That is absolutely key. Most people trading there never touch it. The COMEX just allows people to trade those promises, those paper contracts. They're never usually settled for the metal. It's usually just for cash. And for decades, the system has been working on that assumption that the metal's just never really going to move. It's like signing up. I've used this as an example before, Clive, but it's like signing up for a gym membership. And instead of working out, everyone just talks about their fitness goals. They don't break a sweat. There's nothing tangible because no one's moving, basically.
Yeah.
Now, the other thing that's really important as well is, of course, I know you covered this a few days ago, but there are two categories on the COMEX. They have silver in their vaults, which is registered, which means it's available for delivery. It can leave the vault. When someone turns up, they hand it over. And then, of course, you have the eligible silver, which is metal sitting in COMEX vaults, but it belongs to somebody else. It's not available for delivery unless the owner wants to sell it or move it. So what the COMEX does, of course, is it takes total inventory and it includes both numbers. It makes the vault look a lot fuller than it is. And to really dumb that down, just in case anyone doesn't realize, that's like me having 10 parking spaces. There are 9 Lambos sat there and one trusted old larder, if you like. But only the larder is yours and the other 9 belong to somebody else. You're basically faking it. And yes, like I said earlier, as of today, 98 million ounces of registered silver in the vault, whereas total inventory, I think, is about 400 million. But it's irrelevant anyway. That's a Fugazi number. That is just a distraction. And this is where it's really alarming, Clive. Registered silver, the stuff for delivery, is down 70%. 70% since 2020. That's the real inventory. So yeah, over 700,000 ounces leaving every single day. And that number's just accelerating. It's going up. And back in 2020, I think it was 300 million ounces we had. Now it's just over
98 million.
Yeah. Crazy.
Yeah, I just bring up the numbers we speak, but yes, you're right.
How long, the question is, how long can they keep that charade up for? And the other misconception as well is people think this is just one vault. It's not. This is spread out in multiple facilities and managed by different depositories and banks, which makes tracking the silver even more complicated because you've got those additional risks that are associated with inventory and reporting discrepancies because they've all got their own systems. So it's a bit like a game of pass the parcel, if you like. In January, 50 million ounces left those vaults compared to just what was it, 6.8 million, I think, back in 2024. Sorry, Clive.
Nick, I'll interrupt you for a second because you just said 98 million ounces, which was correct. But I see the latest numbers have just come in for yesterday. We're down,
right.
We're down to 93 million ounces now registered as of now.
Wow. So see, look at this is going on live.
This is 5 million ounces. Literally, almost as you were speaking, we're down from 98 yesterday to 93 today. Well, I suppose that's yesterday. And you were talking about the day before. You say the day before that was 101 million. The day before that was 102 million. So the money it's just draining.
Yeah, you cannot make it up. I can't believe it. Look at that. It's almost serendipity there, Clive. But that's a 700% increase in remittances. That is insane. So the parcel is getting passed around faster than ever. Soon the music's going to stop, leaving someone holding the bag and the rest with nothing. I think we all know who that's going to be, of course, not mentioning any names. But the official explanation from the exchanges right now is, oh, this is all normal activity. It's certainly bloody not, Clive. If my wife went out and spent 7 times more on the credit card, I'd be a bit worried. I think she'd lost her bloody mind. And they make us think this is normal. It's mad.
Yeah.
But
by the way, can I just interrupt and say, everybody, this is not investment advice. Nick is just giving his opinion. You're not a registered investment advisor, nor am I. We're just giving our opinion. And I think, Nick, the obvious solution to this, because we can make the supply and the demand match if the price is higher.
Yes, exactly. Now, there's another number as well. If you're in the industry and you understand the market in a little bit more detail, like yourself, Clive, you know there's that important number to look at, which is the lease rate. And this is something I really want people to be aware of. And this is the number. This is the one number that tells you whether there's lots of silver or there's very little of it. And the lease rate is what it costs to borrow physical silver. So whilst London, of course, is the largest trading hub in the world, it's not all buying and selling. Sometimes professional participants need to lend it to one another. Now, why would anyone want to do that, Clive? Well, an example might be where one participant needs to deliver silver soon, but doesn't yet have it, or where another has the inventory, but doesn't need it for a couple of weeks. Or alternatively, if you're a greedy Wall Street trader and you want to do something called shorting, and here they need to borrow the physical silver to place their bets. In order to do that, they need to pay an interest rate on it to the person that actually owns the silver.
I mean, I suppose the most realistic example is where a consumer of silver, an industrial manufacturer, needs to get the silver now to keep the production line going. And for some reason, they can't get their hands on it from their usual supplier. It's got to be borrowed from someone else.
Yep, exactly.
There's no choice. They can't stop the production line for want of silver. So if they can't get it from where they get it normally, they have to borrow.
Yep, exactly that. And just in case people aren't aware of exactly how that works, I mean, shorting just involves selling a commodity at a high price, intending to buy it back later at a lower price and returning the borrowed item to the lender, so the borrowed silver to the lender. And if a speculator wants to go short on the physical, they've got to get their hands on it. And that, of course, which is, again, really important, is to avoid something called naked shorting, which is selling without borrowing it first, which, as we know, Clive, is highly illegal. And it's really risky because, of course, it creates this synthetic, non-existent supply, if you like. And borrowing the silver ensures that their trades are covered by the real inventory that's in the vaults. Now, the banks, as we know, have been fined billions for this. There are loopholes. I've looked at the contracts, everything else. There are loopholes as to what's a covered or an uncovered position and whether they have reasonable grounds to believe that the metal's there. I mean, it's really, really shady, opaque stuff. And Barclays, UBS, JP Morgan, they have all paid fines in one way or another for manipulating the market. Yet, they keep operating. So that tells you all you need to know really about the market. Now, just going back to the lease rate for 1 second, Clive, I think that the normal level is usually between about 0.3 and 0.5. But they went up to 8% in January. And at the moment, as of I checked last night, it's 6.5%.
How do you check it, Nick?
I just go online, Clive, and just cursory Google search will tell you the lease rate.
Wow,
just in case anyone wants to. You don't need a
amazing.
Bloomberg terminal or anything. Yeah, it's.
Okay. I mean, obviously, anything above 1% is extreme.
Yeah. Oh, it is. Yeah, absolutely. So that, I mean, 8% in January. That's phenomenal. So when these interest rates spike, it means it's hard to find physical silver, basically, as people are willing to pay 20 times more for it. Now, that doesn't happen when the vaults are full. It happens when the vaults are completely picked dry and people are scrambling to get it. So like you said, Clive, your fabricators, your mints, your industrial users, they need it immediately to fulfill those contracts. They can't renege on those, your solar panels, your cars, and everything else. Now, the other thing, which I know, of course, you have also done a video on, Clive, is the March demand. It means that those industrial users are going to come for it. And what happens then if it isn't available for them?
So we saw a very high level of deliveries in the February contract. Now I took a snapshot of the open interest about a month before February came to maturity. It was 9th of January snapshot, and literally over 100% of that 9th of January snapshot was called for delivery. Now, of course, that open interest changes every day, so it's not the same number every day. So we can't sort of say it was 100% of the open interest, because it's like a rising and falling number. But as a good indicator, early January number, by the time we got to the end of January, 100% was called for delivery. What's going to happen for March? If it's 100%, which I don't think it will be, but because March is one of the major months where mostly it gets rolled over. But let's see. We might have a lot of people want delivery of it.
Absolutely. So you do the maths there, Clive. I think we'll probably likely see maybe another 11 million ounces leave the COMEX, just based on that 700,000 figure. But with the numbers as they stand last night, it's only going to take 25% of people demanding delivery for the vault to be empty.
Well, now I've got a better figure on that, because I've done a trend line analysis based on the current trend. By the first delivery day for March, we'll be down to 67 million ounces on ineligible, if that trend continues. Right. That's assuming, obviously the trend can change, and it does change every day, but it will be at 67 million by the first delivery date if the trend stays the same as the last week. Yeah. But not last year in March, 80 million were called for delivery, and of course the number of ounces called for delivery at the start of this year were many times greater than last year.
It's 98%, isn't it, February, Clive? Is it 98% now?
It was 98. Well, it went over 100% of that snapshot I took of the open interest in early January. But of course, as I say, the open interest goes up and down all the time. So obviously it must have gone up, because we've now gone to over 100% of that number. But what I'm saying is a large percentage of the contracts in January, February were called for delivery. Much larger than usual. Last year in March, 80 million were called for delivery ounces. If it's larger than usual, it'll be more than 80 million. We don't know if it will be. It might be less than usual. I mean, but that 80 million was what was called. And it looks like on present trends, we'll have less than 80 million at COMEX based on the present trend. Obviously, it's not possible to get to a situation on the last day where you have less in COMEX than can be delivered, but to make those two numbers match, that the price, I think, has got to rise, so that people move silver from eligible to registered, or they deliver in silver, or people close their contracts at a faster rate.
Yeah, exactly. I think the price is going to rise because of that, for that very reason. Yeah. And because otherwise, what happens? Those industrial users, they have to go directly to the mines, and they're going to say, well, look, you can have it, but in 18 months, in a year, that's not possible for them. So I think, it's going to have to rise. So look, what happens when the COMEX does run out, if they do, and they can't carry on kicking the can down the road? There's several things. So first, they can declare force majeure and cash settlement. They could say, look, we're going to give you cash for instead. We can print that easily enough. There's not enough of it. And that's perfectly within their power and the rules of the exchange. But that totally destroys their credibility as a price setting mechanism. They're basically saying, well, we're not a silver exchange anymore. And more importantly, what does that say, Clive, about the other commodity markets in general? The copper market, the gold market, every other exchange is operating on the same fractional reserve model. So it exposes the fragility of those. And the entire financial system is only based on confidence. confidence that you buy a contract, the exchange has the metal that it says it does, basically. So if that happens, the physical assets are going to skyrocket. The paper market collapses as there's no anchor, and paper silver and physical silver diverge dramatically, and you end up with almost like a two-tier market with physical trading in private deals at multiples of whatever the COMEX is going to say it's worth.
I mean, I don't think it's likely that COMEX would fail or collapse. I think they've got lots of tools at their disposal. They can do margin calls, they can introduce limits, they can introduce new rules, and of course there's the price mechanism on its own, because nobody in their right mind who's dealing in COMEX is going to leave themselves in a situation where they're short but they have no silver to deliver. So what they're going to do, they're going to literally buy it before they have to deliver it. And they do have by the way, they do have a month to, so the shorts are the ones who call the shots on COMEX. They have a month in which they can decide when they deliver. So they, just because the first delivery date's coming up in just under 2 weeks, they don't have to give notice of their intention to deliver on that day. They can wait right through to the end of March. So of course, some shorts might say, we'll sit it out and see if we can get a better price during the course of the month. But as the end of the month approaches, at some point they'll have no choice but to either close their position or find some silver somewhere and deliver it, which both of them, closing their position means they've got to buy back the contract, pushing the price up, or finding some silver means they've got to buy it somewhere and push the price up. So I think March is probably going to be a fairly good month.
Yes, very much so from a price perspective alone. But you're absolutely right, Clive. I think what they're going to do if this gets worse is they're just going to change the rules. So markets, of course, don't repeat, but they certainly rhyme. And we have discussed this before in the 1980s with Silver Thursday and the Hunt brothers, who accumulated a massive position of silver. I mean, it headed towards $50. So what did the exchange do? They changed the rules and they implemented Silver Rule 7. So you could only sell silver and not buy it. Absolute insanity, absolute madness. We saw it recently, of course, with GameStop, with Robinhood. They pulled the same thing, suspended trading. And what was the result? Silver crashed 80% from $50 to $10. The Hunt brothers got wiped out. And you're going to see that happen to other people with these type of positions. The house always wins. So they will just do that. Go on, sorry, Clive.
For those who don't know, the Hunt brothers, it was a situation where these two brothers decided to corner the silver market, and they wanted to buy up all the silver available on the planet, all they could get their hands on, to squeeze the shorts on COMEX. And the silver price literally went from $1 to $50. But at some point, the shorts were screaming so loudly they had to bring in all these rules to stop them doing it, to the detriment of the Hunt brothers. Now they weren't, under the rules when they started doing this, they weren't doing anything illegal. But by the change of the rules, if they would have continued, it would have been illegal. So they changed the rules on them mid-game. You talked about the question of closing down the ability to trade. Well, I don't know if you were aware of this, but in the last week or so in Shanghai, a silver fund was shut down, not shut down, suspended from trading.
Is it 100%, Clive? 100% of net asset value or something crazy?
It went to a premium of 100%. So this was a fund like very similar to an ETF. In other words, people could subscribe for units at net asset value. But the problem was they couldn't get the units, they couldn't buy the silver at NA, they couldn't buy it. So they couldn't, first of all, they suspended the creation of new units. So the people weren't able to say, I'll have some units at net value. That caused the premium on the stock to rise to over 100%. And then as a consequence of that, the authorities suspended the trading in the silver ETF there. I don't think they called it an ETF, but it's basically a net asset value fund. They suspended trading to stop people from being burned. And the fund itself, which was quite interesting, which had been pricing its NAV on the Shanghai price, then turned around and said, we're now going to price ourselves on the COMEX price, which is $10 or $20 lower.
It's crazy. I don't know how they get away with it, Clive. I really don't. But same thing in 2011, wasn't it, with the margin massacre? Silver was ripping higher after the financial crisis. Obviously, people didn't trust the banks. I can't blame them for that. Silver again went to $49. And then what happens? The CME, they come in and they raise their margin requirements 5 times in 2 or 3 weeks or whatever it was. Every time they raised their margins, leverage traders had to sell. And then, of course, it causes this cascade of sellers, which crash the market by about 50%. So there's a pattern here. Every single time silver threatens to break out, the exchange changes the rules. And then the paper price crashes. They always seem to do it as well when the market's really starting to break and go to the upside. But in 1980 and 2011, COMEX had plenty of silver. The difference is the vaults are now nearly empty. So they can change all the rules and the margins that they want, but they still can't print any silver. Now, they've raised these margin requirements 3 times this year already to force people to sell their silver contracts, which obviously led us to the January the 30th crash. And of course, we saw what happened there. The silver price went from $120 all the way down to 78. It's the first day of my holiday. I've got 2 mobiles, Clive. They were both going absolutely frantic. My wife was going mad at me. It was you couldn't have timed it worse. But just so everyone knows, of course, yes, on the COMEX, you're not buying the physical; it's the paper market, and you're buying a right to use that contract at some point in the future. And these markets use leverage. So again, all your audience, of course, are going to know, but just in case any of them don't, Clive, say you want £100,000 worth of silver, you just put down £10,000 of margin. That's a 10-to-1 leverage, which means that if it goes up, you make 10 times more money. But it's important to know exactly how they work because that can be used as a weapon. So the exchanges can change those margin requirements whenever they want. So they can say, you know what, Clive, we don't want 10% margin anymore. We want 20%. We want 30%. Maybe we want 50%. And the CME, they know exactly how much margin is being used and where the levels are. So what happens when margin requirements go up? Well, as a trader, you've got 2 choices. Option 1, you add more money to your account to meet the new requirement. Or option 2 is you've just got to sell your silver position because you have to. And that's what we saw. Like it was a complete snowball effect on the 30th. They used up all their margin. And the exchanges know that. They know full well what's going on.
Well, the other problem about leverage is every price move is multiplied. So if if it has a 1% rise, you make an extra 10% if you're 10-to-1. But on the other hand, if it falls by 1%, your 10% margin is completely wiped out.
Mm-hmm. Yes, exactly that. Exactly. I'm certainly not suggesting either that all this margin data is being used or misused, because of course these people are outstanding members of the community. But when they hiked those margin requirements, they did it very aggressively this time around. Very aggressive.
They're normal human beings. If they see a profit to be had, they'll take it.
Exactly. And look at, let's say, for example, you trade 20-to-1. If the CME raised their margin by 2%, like you said, Clive, it doesn't mean you need 2% more money. You need 40% more money. And they can't stump it up. The exchanges know that. So what happens? It's this domino effect. One person's forced selling pushes the price down, which triggers the next person's margin call, which forces the price down more, and then even more selling. And it's just this brutal cycle, really.
Let's talk about you and a couple of scenarios here. I've got 2 scenarios. One, I think I'm the God's gift to the trading market, and I think I can make a ton of money. Should I be gambling on the paper market or the physical market? And 2, I want to protect myself against some monetary financial crisis which might come in the future. Should I buy physical or the physical coins or bars, or should I be going and betting that the paper will still be there when the crisis hits? What would you do, Nick?
Please. if it does go over to Shanghai and we end up with a completely separate market and it just becomes a paper silver market, which it could theoretically happen, I don't know the exact likelihood of it, you have to be owning the physical. Do not enter this market betting or using any leverage at all, because it is financial harry-carry. That is suicide, because you have got no idea what games are being played, and you'd be arrogant and maybe naive to think that you do. So just sit on it. Get the physical while you still can, because it's always going to be needed. They can't print it out of thin air. You're always going to be protected, and just ignore the short-term volatility, because Clive, sometimes I feel more like a counselor on the phone to my clients, because they'll buy, I don't know, buy 500 grams worth of silver. It dips 10% overnight and they can't handle it. If you don't over position yourself, you have to have some of the metal given what's coming. But if you can't handle this or stomach the volatility, don't do it. And people will start doom scrolling and they get themselves so worked up. It's a very exciting market, don't get me wrong. This is economic case history we're living through. But at the same time, if you're going to do it, don't use all of your portfolio, if you like. Because it is inherently corrupt and they can do whatever they want. And just one final thing, actually, there, Clive, just while we're at it. JP Morgan closed their silver shorts, didn't they, at exactly the very bottom of the price crash? I mean, it was almost at exactly the bottom.
I think actually it was probably because they got to the delivery month, they literally just took delivery of something which had been they'd contracted to buy. So that was at that delivery takes place at the settlement price, which is the close of business for the day. So they were taking delivery, but what we don't know is, were they taking delivery for themselves or was it on behalf of one of their clients? That information was never disclosed.
Yeah. No, exactly.
But the real point is someone wanted it. That's the point.
Yeah. We can speculate as to who it is, but we just don't know. But it's no coincidence either that the London Metal Exchange went off on Friday, and then of course HSBC, the second largest short holder on the LBMA, well, their systems went offline as well. What? And then the cherry on top of the cake, they wait for Asian markets to close for the weekend. They're 12 hours ahead, and they announce a new Fed chair, who's of course hawkish, and he wants to stop the money printing, and they can blame the massive dip for that. I know it seems a bit of a conspiracy, Clive, but the COMEX and JP Morgan care about you as much as Pfizer cares about your health.
Tell me, has anything changed with respect to why people would want to own the precious metals? I mean, have we declared world peace or anything like that?
No, nothing's changing, Clive. But the only thing I'm noticing is it's getting very, very difficult on the wholesale market to get hold of coins and bars. That is drying up very dramatically.
It is getting hard. I actually bought a coin today, just one gold coin actually. It was one of two which became available from a major dealer, and I've sent my wife into town. She's just picked it up at lunchtime. It's one of the British beasts of England. It's called the Falcon, and it's about 5 or 6 years old. But it's one which I was missing because the Queen's Beast, they have different animals from every year. I don't know how many there are, maybe 12 of them. But it's one of the ones which I was missing from my collection. I said, "Quick, go and grab that one quickly." They know me because I'm in that. I often go into that particular place to buy stuff, and so whenever they get anything, they call me up and say, "Oh, we've got something."
Clive, those are great coins. That's what most of our clients are buying at the moment, actually. The big 2-ounce ones as well. Yeah, they're fantastic.
The gold ones are 1 ounce, and the silver ones are 2 ounces, aren't they?
That's it. Yeah, really, they're kind of twice the thickness. They're beautiful to look at, although most of them never see the light of day because they're just sat in vaults. But with those, there's a limited amount of them, of course, and you'll actually find that those will go up at a slightly higher rate. If you're selling it to the right person, you can get a better price for it. Or you just stick with the standard 1 ounce Britannia, silver Britannia, yeah.
I mean, if you want gold bullion, the Britannia is the way to go. But if you want to have something which will have a gradually increasing demand, buy the coins which are part of collections, like the Queen's Beast, because 5 or 10 years from now, it's going to be very hard to obtain that particular animal from that particular year. because they won't be ready for sale. So if you really want it badly, you're going to have to pay well over the odds.
Yeah, but at the moment, every time a new one comes out, buy them, stash them away, and in 5 or 6 years' time, regardless, even if the silver price is only up 20 or 30%, they're going to be worth a lot more. And that's just that product. And when you look at silver being in a supply deficit for 5 years, that's 200 million ounces a year. Over the last 5 years, that's a 1 billion ounce deficit just in silver, physical silver. You know what the value of those coins is going to be.
Absolutely, Nick. Nick, I wanted to thank you very much for coming on the show today.
Pleasure.
You're looking very casual and quite warm. You must be in a hot country.
I am indeed. I'm on holiday at the moment. So that's why I just had to jump on the call with you, Clive, because of what's going on. Couldn't have been worse timing from my perspective. No, not at all. But I think I'm more red, am I not, than tanned at the moment.
Yeah, you've been in the sun a bit, by the looks of things. So what should people do if they would like to buy either gold or silver physically, which is where Gold Bullion Partners comes in? Can you tell people here what they can do?
Well, I am still working, Clive, believe it or not. So anyone that's out there that's already dealt, they can give me a call. But call us up. One of the guys will deal with you. Everyone's got a personalized account manager here that can assist them. If you don't get through, they will get back to you usually within an hour or two. It's just the phones are so busy. Or just email us. You can email accounts at goldbullionpartners.co.uk. But yeah, give us a call. One of us will get in contact. You should have a link as well on your page there, Clive. So you get preferential rates of storage, of course, coming through yourself. Obviously, we want to look after your audience, but please don't hesitate to give us a call. There's no stupid questions when it comes to this. Not at all.
And Nick, for those who don't know, you're in the UK and most of your customers are from the UK, but you also deliver to a few European countries. Am I right? Would you like to just talk about that?
Throughout Europe, we can do that as well. We've got vaults in Switzerland, of course, and London. So all the deliveries will come from our Swiss vault there. Most people, of course, though, Clive, are doing silver for storage because that way you can avoid the VAT by keeping it in a bonded vault. Or you can keep your gold out there as well if you want, if you're worried about capital controls or anything else. But yes, just delivery or storage.
Perfect. And there's no VAT on gold at the moment?
No, not at the moment. Hopefully I don't think they're going to change that, Clive. The juice wouldn't be worth the squeeze. And I think I read a statistic. Go on, sorry.
I don't think they're allowed to, but
no,
yeah, you never know.
I mean, that's another rabbit hole we could go down, but no, I don't think they would do. Not at all. But yeah, still HMRC, you've got to pay 20% VAT on silver if you take delivery of it. So I just don't think it's worthwhile taking that hit when you could have 20% more, but just kept in a vault. And it's a lot more convenient as well. If you ever want to sell it in the future, you pick up the phone rather than just taking a huge, great big tray's worth of silver to us on a trailer. I mean, what 500 grams worth of silver is going to take up the size of a drinks fridge freezer? It's a lot of space.
I can see someone getting on the London tube, or Americans call it subway, with a suitcase full of silver. That would be quite worrying if I was doing that.
Yeah, I wouldn't recommend it. Not in London anyway, with how dangerous that place is becoming at the moment. It's just don't do it.
Great. Ladies and gentlemen, thank you everybody for watching this show. Like and subscribe if you want more. Nick, thank you very much for coming on the show. And I wish everybody a great weekend. Bye-bye now.
Oh, thanks so much, Clive. Take care.
Take care. Bye-bye.